Terrific. I will just start. My name is Bruce Murphy. I am a mortgage loan officer with Fairway Independent Mortgage in Whitefish Bay. I'm also a reverse mortgage lender for Fairway, and thought this would be a good idea to present this product to Keller Williams because we want you guys to be able to do more business and generate more income. I'd like to introduce Harlan Akala. Harlan is the head of the entire reverse team in Marshfield and for Fairway. They are, he has an incredible team in Marshfield that makes all of us look good. I will tell you that because they are exceptional. Harlan is also an author, has written a book called Home Equity and Reverse Mortgages, the Cinderella of the Baby Boom Retirement. This is reverse mortgage are more than just getting a reverse mortgage for the elderly or people 62 and above. It's really about helping save retirement, using the tool as a retirement, or using the reverse mortgage as a retirement tool. And Harlan is the leading expert, one of the top people in the country with this. And I'm going to turn it over to him to do the presentation. Go ahead, Harlan.
Well, thank you, Bruce. We should have some fun for the next, this is a 3-hour program, right? You told them that, Bruce?
Right.
Okay, awesome. I don't know how many will be on here by the 3rd hour, but seriously, we'll try to get as much done in the next hour as we can. I love having your videos on. That makes it so much easier. I don't care if you got dogs, kids. I don't care if you're eating. It just makes it a lot easier and more fun. And I love seeing smiling faces. So we appreciate it. I don't care if you're working on your emails or anything else. We're not monitoring this from that perspective. So it's a thrill to have you guys on this morning. So here I am, a native of Wisconsin. I'm coming to you this morning from Connecticut. I had to come out here for some video work. And so I flew into New York last night. And oh man, LaGuardia, what an awful airport. We are fortunate to have Milwaukee. But anyway, what I'm going to tell you, I'm going to give you a little disclaimer right now. And the disclaimer is if you don't want to pay more taxes next year, click off from here because the information I'm going to give you is going to increase your income if you follow it. And I know that because I've talked to thousands of realtors across the country for Fairway in the last 6 years. And all of them, not a few, all of the realtors that followed what we told them increased their business a little bit or a lot to an average of 30%. So it's significant of what the difference that you'll make. And the reason is because most real estate agents don't like reverse mortgages. Most real estate agents are really unimpressed with them, don't want to mess with them. And because of that, everybody's chasing the millennials. And then they don't really care about us old people. Now, I don't have an identity crisis or anything, but you see, I'm an old guy with gray hair. And I'm in the reverse mortgage age. Next year, I'm going to do my own reverse mortgage. 62 years old, I'm doing my own reverse mortgage. I already purchased the house that I'm planning to use. Now, if I would have already been 62, I would have used a reverse mortgage for purchase to take care of the financing, but I couldn't. I was underage, so I had to wait. Underage for us is under 62. Very different scenario from there. So here's the deal. I want to start you out with a little bit of a shock situation before I go any further of how to lose $30,000 in commission. Okay. And Brian's an old guy too. He doesn't have as much hair, but it's got about as much as me. So we're good. We're in the same age bracket. Okay. So here's how to lose $30,000 in commission that fast. My sons, we have 4 sons, all of them settled down and moved into the Minneapolis area. So guess what? They had grandkids. For any of you that have grandkids or any of you that know about grandkids, guess what happens when your kids have grandkids? You love them more than your kids and you want to be with them and you move to be by them. The single biggest reason for old people to move is to be by their grandkids. And so as a result, I'm going up to Minneapolis looking at houses with my sons. 4 sons, 3 of them are buying houses in the Minneapolis area, not in Minneapolis. That's kind of a bad place to buy houses right now, but in the surrounding suburbs. And 3 times I met their realtor, and I drive into the showings with my car with a Wisconsin plate. I'm holding my granddaughter or my grandson in my arms as we're going through looking at the houses. Guess how many realtors ask me a very simple prospecting question? Are you ever thinking about moving up to the Minneapolis area? Guess how many realtors ask me that question? Yes, thank you, Brian. 0. None of them asked me. Not one. No, I'm not mad about that, but it just boggles my mind that they would not ask that question. I've got Wisconsin plates. I'm holding my beautiful little granddaughter. I'm obviously in love with this little girl. And they don't even ask me that very basic question. If you want to increase your business, ask every single one of your millennial clients, what's going on with your parents? Have they ever thought about moving? Have they ever thought about selling? Are they in a 2-bedroom house? Tell me about your parents. Tell me about your family. So I called up a Fairway loan officer in Minneapolis and I said, hey, Dominic, do you know any, realtors that like dealing with old people? And he said, oh yeah, that's easy. That's Susan. I mean, she does my, any of my reverse mortgage stuff. She's really good at it. So I called up Susan. Susan got a $30,000 check a few months later after she found me a house. And not only that, my 4th son had not bought a house yet. Remember, I had 4 sons. The 4th son hadn't bought a house yet. So she said, what about Josh? Is he going to buy a house? Because he moved out of downtown Minneapolis where all the demonstrations were going on and moved into our house that we bought because he wanted to get the heck out of downtown Minneapolis. And she said, is Josh going to live with you a long time, or is he thinking about buying his own house? And I said, no, he wants to buy his own house. And so she showed them houses in Eden Prairie, and she just closed on a house with them 2 months ago. So just like that, $45,000 in commission because she liked dealing with old people and did not just look at millennials. I can't stress that enough, how important it is. And I'm actually going to show you a picture. Let me see if I can share here. I'm pretty sure that we're all set up for that. I'm going to show you a picture. I hope you're all done with breakfast because this is an interesting picture that I took at Walgreens. This is the diaper aisle. Has anybody ever been to the diaper aisle at Walgreens or CVS? I want you, next time you go there, I want you to take a tape measure along and I want you to measure how much shelf space is devoted to adult diapers and how much shelf space is devoted to baby diapers. It's the same amount. Should the real estate and the mortgage people take a lesson from that? You better believe we better. Because guess what? There's 4,000 people a day turning 62 that should get rid of their mortgage payment because they're in a house that's too big for them. There's 10,000 people a day that are turning 62, period. And above those 10,000, about 1/4 of them, 1/4, about 2,500 people a day are planning on moving within the next 5 years. Selling and moving, listing and sale. That is a phenomenal number, and a ton of people totally disregard it. Now, the baby boomers is a whole different deal. Now, my sons all bought their houses. I just had my youngest son call me a few months ago, and when he was closing, and he said, hey, Dad, I got it locked at 2.625. Do you think I should wait and delay the closing because the rates might go lower? I said, Isaac, shut up and close. I closed my loan at 16.5% when I bought my first house in 1981. You're driving me nuts. Just go buy the house. I don't care if it's 2.625 or 2.375 or whatever. Seriously? Don't be dumb. So Isaac closed at 2.625 and then he complained when it went down to 2.5. But anyhow, very different for us baby boomers. 10,000 people a day turning 62. There's fewer pensions, defined benefit plans, lowest return on investment for decades. And the majority of baby boomers have a lot of equity in their home. In fact, this is actually a out-of-date slide. There's now $8 trillion with the increase in values. There's $8 trillion sitting in seniors' home equity. And about 2,500 of those 10,000 people a day that are turning 62 are in 2-story houses. They are not in their retirement house, and they need to get the heck out of their house, let a millennial buy it, and then turn around and go buy a house that is fit for them. What did we do? We raised our 4 boys on a big 6-bedroom, 4-bath house, 4,500 square feet. It's closing. We're selling it next week or next month in the beginning of July. We bought a house in Minneapolis by the grandkids, all on one level, office, kitchen, bathroom, bedroom, everything else, all on one level so that we can age in place if we get to be 85, 90 years old. If we're in a wheelchair, we can live in that house. We couldn't in the old house. All the bedrooms are upstairs. There's all kinds of stairs and cleaning and everything else. It won't work. You have no idea how many of us old people are in the wrong house. You know, one of the people that came to this specific seminar specifically, and I told her about this little diagram, which I'm going to get into real quickly. And by the way, I think that I've got a picture. Whoops, I don't have that in here. Thought that I had that. Oh, here it is. Yes. Thank you for getting dizzy there as I flipped through. So the fact is that there's the 60 to 80-year-olds on the right side of the screen. There's the millennials on the left side of the screen. And there's the Gen Xers in between. And if you take a look at the demographics, the baby boomers have driven every demographic since Gerber baby food in 1946 and 1947, as things just exploded. And we've driven everything from the disposable diapers to the car industry to the station wagons and then the minivans and the Beatles in music and Schwinn bicycles and leisure suits and mini skirts and bikinis and you name it. The baby boomers have driven the economy and we're not going to stop now. There's too darn many of us. Now, I'm not saying millennials aren't important. I've got 4 millennials. We wanted to get them all into a house and we finally did. All 4 of them have bought a house and I helped them with it if they needed any help along the way. Because it's critically important for them to start building equity in a home. It's dumb not to buy a home. In my opinion, it's really silly. And obviously that proves out. People that don't have homes are not as wealthy when they get to be in their 60s, 70s, and 80s. If you keep renting your whole life, not a good idea. So the bottom line is this. You've got all of these people going through. Now, one of our loan officers or one of our realtors in Denver who came to this exact seminar, going through the same slides, said, I'm going, and this was pre-COVID, but you can do it again now. She said she was in Denver and she said, I'm going to go knock on all of the doors of houses, 2-story houses in this one neighborhood that she lived in North Denver. And I'm just going to ask a simple question. And I said, what's that simple question? She said, I'm just going to ask people if they've ever thought about moving out of their 2-story house. Because the only people that are going to answer the door during the day back then, because nobody worked at home, but back then she knocked on the door between 9 and 3 and just said, hi, I'm from the area. I'm Susie, the realtor, and just want you to know that I'm available to sell your home and you can get about $450,000 for it. I don't know if you're aware of it. Have you ever thought about moving out of a 2-story home? Do you know she got 100% yeses? Everybody who's over 60 has always thought about moving out of a 2-story house. Because we don't belong in 2-story houses. I can still take the steps 2 at a time. I'm pretty healthy, but that's not going to be the case 10 years, 20 years, 30 years from now. So why don't I just get prepared to move when I want to rather than when I have to? Just makes sense to do it that way. So here's the issue. As you're looking at this market that is very neglected and you will not have very much, you're going to have very little competition in this area because everybody's chasing the left side of the screen. Everybody's after the millennials. Well, let me tell you, the people over on the right side of the screen don't get talked to as much by realtors, and they answer their phones. They don't just require you to text. They even listen to voicemails. I mean, it's an interesting group. It's kind of fun to deal with them once in a while. They might tell more stories and it might take longer to deal with them rather than a 2-second text response, but we're really a pretty good group to deal with. Now, before I go any further, I want to check down here in the chat box to get an idea from you, because there's a lot of people. So I got real positive and excited about this whole reverse mortgage thing. But I know without question that there's a lot of people that don't like reverse mortgages. So I've been told that I'd be better off in jail than ripping off old people out of their houses, which is not the case, but that's what some people think that it is. So I want to ask you, what are some things that you've heard or don't like about reverse mortgages that would stop you from recommending it to a client or even finding one for yourself or for your parents? You heard that I'm going to get one next year when I turn 62. But what are some things that you want to make sure that I cover with you to find out whether or not this is something that you should use to finance a house? Any positive, negative comments that you have in regard to reverse mortgages? And think about it. Are you going to tell your parents to get one? Are you going to get one when you turn 62? What are your thought process? And be very transparent about how you feel. And you can unmute yourself too. If it's easier to unmute yourself and tell me or type it into the chat box, whichever is easier.
Aaron, it's Brian again. So
Yes,
I thought I'd just explain this. So I have thought about this, and I wanted actually to get on this seminar because I was looking for a vehicle we're finding a lot of people that are looking to do that, like sell their house and get into a condo. But like so many others, they're concerned now about being able to find a place and the timeliness and basically having resources to, still maybe not have their home sold on a home sales contingency, which you can't really do in this market, and be able to get into another house. And so I always thought that this would be sort of a good vehicle, but honestly, I guess I need more talking points in how to bridge this perception of that it's a scam or, it's some sort of infomercial out there that's, isn't legitimate, and we're just trying to get at their resources.
Thank you for that, Brian. Yes, and it really needs to be in that two-step process, because no matter how good the product is, which it is, it's a fantastic product, it's highly regulated, and I want you to all of you to understand, I didn't like reverse mortgages 18 years ago. I told people not to get them, stay away from them. They're a ripoff. It rips off the old people and screws their kids. I really, really did not like reverse mortgages. I was upset about anybody that even talk about them. It was like, no. So then I was invited to a reverse mortgage seminar in Miami in January. Now, if you live in Wisconsin, you go to any seminar in Miami in January. You don't care what it's about. It's 20 below zero. So get the heck out of here and go to Miami. Who would not do that? That's the only reason, selfishly, that's the only reason I went. I didn't believe in them. But then when I understood what they were, I've evangelized. I've done over 1,000 of these reverse mortgages myself, my parents, my wife's parents, my uncle, my sister. Everybody's got a reverse mortgage that I know. My teachers that from high school, I talked to everybody about it. But you have to understand the basics of it. So think about this. And I'm going to ask a question. Do all of you, which I assume the answer is going to be yes, but do all of you think buying a home, you know what my feelings are about it, but do all of you think buying a home is a good investment? Is there anybody that would type in no on the chat box? Okay, so the silence is definitely yes. Everybody thinks that it's a good investment. Well, I'm going to tell you that even though half my net worth is in real estate, I think real estate purchases are a horrible investment unless you have an end game with a reverse mortgage. And I'll tell you why. I talked to Josh, is one of my sons, and I was talking to the neighbor in the back fence the other weekend when I was up there. And I said, hey, Larry, when did you move into the neighborhood? And he said, 40 years ago. I said, wow. How much did you pay for your house? Can I ask? He said, oh, we paid $40,000 for it. It was brand new. Well, his house is similar to Josh's. It's a little bit nicer. So it's $450,000 to a $500,000 house. And he bought it 40 years ago for 40 grand. Is that a good investment? Well, maybe. Right now, it's a horrible investment because he's got it paid off. He doesn't have a reverse mortgage on it yet. I'm talking to him about it, but he can't do anything with it. He's got to continue to pile money into that house every single month. Taxes, roof, fixing stuff, utilities. That is nothing but something that is sucking the money out of his retirement income. So we need to think about how fantastic real estate is in an investment with the idea of the end game. So I am going to, and this is kind of interesting, I'm going to shock you with another picture, and I've got a question for you here, because it's an important question that a lot of people don't think about. And it's this slide right here. I've got a perfect record on this slide, an absolutely perfect record. Nobody has ever answered this question yes. Maybe today is the first day. Has anybody ever seen a tombstone that looks like this? Has anybody ever seen a plaque on a casket or a cremation urn that has something to this effect? The perfect record continues. No, nobody. Nobody looks at this and says, I'm so glad that I'm on my deathbed and I have $348,000 in home equity. Nobody does. Well, why do we all live like that then? We all take our cash and we put hundreds of thousands of dollars of cash every single year, every single month, and it turns into equity, which looks real, but it's not real. It's just kind of fake. It looks like this little $100 bill that I got here. And during our lifetime, we take all of that money and we put it in there. So this is very important as a real estate agent to make sure that you're getting across this to your client. So I'm going to go back to my other screen here. Okay, so think about this when you're talking about real estate with your clients, because this will help you sell more real estate on the forward side. Do you know what my son said to me when he was driving back from his closing on his house a couple of months ago in Eden Prairie? He said, Dad, wow, that was a lot of papers signed, but we're all done and we're moving into the house. Come on over and help us move. And I hate moving, but I went over and helped him move. But when he was driving back, he said, Dad, I started on my reverse mortgage today. And that even kind of took me aback, even though I train on this stuff. And I said, what do you mean? And he said, well, I'm 31. If I pay this thing down over a period of 30 years, I'm going to be able to take out a reverse mortgage for probably $1 million with the normal inflation and everything else. So think about these three buckets in light of what I just said. Everybody has three buckets of wealth. Bucket one is your ability to make money. You make 30,000 a year, you make 50,000 a year, you make 100,000 a year, you make commissions, you make money in your businesses, whatever. And it goes up to this top wallet and you make hundreds of thousands of dollars. Even somebody making 30,000 a year makes $1 million in their lifetime. So it goes up to the top rectangle, your pre-retirement wallet. And you put money into the middle bucket, which is you try to shave off 5%, 10%, maybe $100 here and $1,000 there to put away for the future, your 401ks, your stocks, bonds, and everything else. And then you go out and buy a house. And that's bucket three. And people put way more money into bucket three in many cases than what they put into bucket two. They pour, right now, we're looking at 30 to 35% of people's income going to housing. They send it to us every single month. Every single month, they're sending us money to the tune of $1,000, $1,500, $2,000, $3,000 a month for their home. Now, granted, it's not strictly an investment. They get a roof over their head. There's the imputed rent, so to speak, that they get to live in their house, but they are forced every single month, like my son Josh has to send a check for $1,800 a month every single month between him and his wife to bucket three. So is that a good idea? Sure it is, because he saw that Larry over the back fence bought a house for $40,000 and now it's worth $450 or $500. So he knows that it's smart to buy a house. But then let's take me. Let's go to the 62-year-old. And now we go to the post-retirement income on the bottom. We get to hit 62. And we maybe slow down a little bit, don't work as much, or I plan on working a long time. I like working and I don't have a lot of hobbies. And so I really enjoy working and I enjoy spreading the news about reverse mortgage. So I'll probably work for a long time, but some people don't want to work past 62. Some people want to stop and get Social Security as soon as possible and just go and fish or whatever. But regardless, from the time you hit 62 until you're 92, your income is almost always going to go down. And it's usually going to go down significantly. So then where do I get my money? Well, then I go to bucket two, or I go to bucket three. And I say, hey, I go to my financial advisor and I say, I'd like some money back. I mean, I gave you a bunch of money. I put it in mutual funds or IRAs, or I'd like money back because now I'm retired. Everybody understands that and everybody plans on that. But how come nobody comes to us or you and say, hey, I bought a house. I paid hundreds of thousands of dollars in payments and taxes and improvements over the years. I'd like some of it back. How come nobody asked for the money back? It's kind of weird when you think about it. I mean, why don't you just ask for the money back? Because you can. I mean, you should be able to. Larry's got $450,000 sitting in equity that is absolutely worthless. And I'm going to offend some of you if you have paid off houses. All of the money, all of the equity in your house is worthless. It's totally worthless. It's not worth a dime. It's not worth a dollar. It's worth nothing until you convert it to cash. The only way you can convert it to cash is if you sell your home. And if you sell your home, somebody else is going to move in. I mean, almost always they ask you to move out if they buy your house. So you got to move out. So now you got to live with your kids or you got to buy another house. The other way to convert that equity to cash is with a mortgage. But if you do it with a regular mortgage, you take out a home equity line of credit, you pull out 100,000, you got to pay back 150 or 120 or 180 or whatever, depending on how long you have it out. So that's not really a good retirement situation. But a reverse mortgage allows you to, guess what? Simply take money out without moving out of your house. I was just talking to a top attorney and financial advisor out in San Francisco area or Napa Valley area. He's got a reverse mortgage on his house. 40% of his equity is used up. He's pulled out 40% of his equity. But he said, you know something, I can still walk into my house and I can use 100% of the house. It's not like my IRA. If I spend it down by 40%, I can only use 60%. With my house, I can pull money out, turn it into cash, and I can still use my whole house. It's a really good deal. And if I use all of the equity up by the time I turn 95, I don't care because I've been able to live in a nicer house than I would have been able to otherwise for a long time. So we have to get rid of this idea that we've got to pay cash for a house. So think about it. If I'm in with Marshfield and I sell a little 3-bedroom, 2-bath ranch for 150 grand, and I come down to your area in let's say I come to Waukesha, and I say, hey, I want to buy a house for cash for 150 grand, and I want it to be kind of nice, and I don't want to do any fixing. And I just want it to be ready to move into. I don't even want to replace the carpet. I'd like it to be relatively new. What do you got to show me for 150,000? Let's jump in your car and take a spin. How many of you are going to be excited about taking me around Waukesha to buy a $150,000 house? No takers. Yeah, because it's not enough. But if you take a look at me and say, well, do you have some money in savings? I'll say, yeah, well, I got it. Yeah, at least $50,000 in cash that we kind of put aside. And you see my gray hair and you say, whoa, Harlan, you know something? You can take that $200,000 that you have. I know this guy at Fairway by the name of Bruce Murphy, and he'll come in with another $200,000, and you will be able to buy a house or a condo for $400,000 and have no payment for the rest of your life. You will lose some equity in bucket 3, but you will not spend any money out of bucket 2 or Social Security out of bucket 1. It's really that simple. 50% down, and the other 50% Fairway comes in with, and the loan is due a year after you're dead, or when you turn 150, whichever comes first. And we haven't had anybody get to 150. That is in the mortgage documents. That's the fact. Where can you get a loan that's not due until you're 150 or until after you're dead? I mean, walk into any bank that does not do reverse mortgage and ask them if they've got a loan that isn't a 30-year loan, but that is a lifetime loan that you don't pay until after you're dead. They will laugh your butt out of the lobby. They won't even take you into the office. And then you tell them that you want something for 2.5%. That's an optional payment or no payment for the rest of your life. Wow. That's what a reverse mortgage is. So let's talk about some of the basic details on that. So if you're 62, you walk in with a 50% down payment, and Fairway comes in with the other 50%, and you now have an optional mortgage. So I have a mortgage. The bank doesn't own the house. Everybody thinks the bank owns the house. The bank doesn't own the house. So the bank simply puts a lien on. Fairway puts a lien on the property for 50%, 200,000 plus roughly 2.5 to 3% interest is what we're charging for the reverse mortgage. And that is going to continue to go up unless you want to make payments. So let's do easy figuring. It's about $5,000 to $6,000 a year in interest. So next year I'll owe 206,000. The year after that, I'll owe 212,000. The year after that, of course, 218 and so on. It's a negative amortizing loan and it goes up. But if I want to make payments, optional payments of $6,000 a year, I can make payments of $6,000 a year and I never lose any equity. But what's probably going to happen to a $400,000 house? Well, it's usually going to go up by at least 2 or 3%. So the house is going to go up by about $5,000, $8,000 a year. So I will probably have just as much equity in the house when I die as I have when I bought the house. The house that I bought in Minneapolis, I fully believe, because I got a pretty decent deal on it, despite as crazy as everything is, I firmly believe that I will never have less equity than what I used as the down payment, ever, because the value of the house is going to go up. I mean, we don't do reverse mortgages on cars because cars go down in value, but or mobile homes because they go down in value, but houses go up in value. So does the balance. Now, if you got a client that's 72 or 82, they only got to put down 30 or 40%. So it's based completely on age, and it's really that simple. If I only had 10 minutes with you, I would say reverse mortgages are good. You got to check them out. Read my book, look it up in the details that we give you, the articles and the information that we have. Look at our brochures. If you don't want to read a whole book, and it's a gret deal. And then I would tell you the second thing you need to know is you just simply have to put down 50% on a new house, and the balance is due a year after you're dead. Now, that means that every house in the MLS is now half price. That's a great senior citizens discount. So if you're over 62, I can get a $500,000 house for $250,000. I mean, that's better than IHOP's discount. So you walk in with $200,000, you get a $400,000 house. Walk in with $300,000, you get a $600,000 house. Walk in with $400,000, you get an $800,000 house, and so on. I mean, that's pretty cool. And so that completely changes my retirement. Now I have to be able to afford to pay the taxes and the insurance, because obviously that's still due, because we don't own the house. We're not paying the taxes and insurance. This isn't a rental. We're not landlords. We're lenders. And so, but it's a very simple scenario of doubling, quadrupling the value over the period of time. So now let's think about how this affects the kids, because people say, well, this is bad for the kids. Is it? If I make payments, you guys see the CDs and the LEs for forward mortgages all the time. If I borrow $200,000, how much do I really pay back? $300 at least, depending upon the term of the loan and the interest rate. So I borrow $200, I pay back $300. Well, now I lose $300,000 in cash. So if you say, well, I don't want my parents to do a reverse mortgage because then I'll get less equity when they die. Well, just a minute, you'll get less cash. If they pay off a house, if I pay off a $400,000 house and it costs me $600,000 to pay off that $400,000 house, that means I've got $600,000 less in cash. I can't have as much fun with my kids while I'm alive. I can't spend as much money on them. I can't give them as nice a Christmas presents because I'm putting all my money into my house. We found people that have $3,000 in Social Security that are still paying $1,200 for a house payment. I mean, that's nuts. Why? What's the purpose of sending money? Because it's not that we want to get to the tombstone with having X amount of dollars in home equity. We want a great fourth quarter of our life, and we want to live someplace where we really want to be. And the thing is, if I'm going into retirement, everybody heard all about forbearance this last year. You can go into forbearance. Well, there's a lot of problems with forbearance, a ton of problems with forbearance. And we have issues with lending to people that went into forbearance. We still do it, but you kind of got to go through the process. And you got to get caught up and everything else. So people that went into forbearance, it wasn't so easy. We just were dealing with a client that was trying to help their kid doing a cash out refinance, and they were in forbearance. Couldn't do it. Couldn't help their kid. We couldn't do a cash out refinance. It's going to take 3 months or whatever before it's going to be good to do it. A reverse mortgage is permanent forbearance. You can make payments. The payments are optional. So we don't tell people, hey, get a reverse mortgage and you have no payments. We tell people, get a reverse mortgage and you have optional payments for the rest of your life. Now, at 62, why would I not want optional payments? I don't know if I'm going to get sick. Dear friends of ours were just ready to retire. And they said, no, we don't want a reverse mortgage. We're just getting a regular mortgage. 2 months later, the husband gets leukemia. And he's fighting for his life, and there's all kinds of money going in experimental treatments and everything else. And now they're doing a reverse mortgage. They should have done it right away because the payments are optional. So why would we not want an optional payment when we get to be 62? We may want to make payments because if we make payments, then guess what? We get a tax benefit sometimes. So we might want to write a check, but we may not want to at all. So we give people the option of whether or not they want to do that. Now, this is in the brochure that kind of gives an idea at each age what kind of borrowing power they have. But this is, Brian asked the question, how do we segue in? It's not your job. Bruce had to go through 16 hours of training at Fairway before he could offer reverse mortgages. You guys can do this in an hour. I mean, we're not going to run you through and try to be a loan officer. That's not the goal of this class, and that's not your responsibility. That's Bruce's responsibility. That's my responsibility to educate our borrowers. So this is an example of a client, Deborah, who wanted to purchase a home for 600 grand. Okay, so she could put down a 20% down payment of 120 grand. And if she puts down 120 grand, then she'd have payments of $2,100 a month at a 3.5% interest rate. That's fluctuated, of course. It's been lower and it's been higher over the last couple of years. So she's really going to pay $897,000 or $900,000 for that house. You're going to give up $900,000 worth of cash if you do a 30-year mortgage. Of course, you can pay it off earlier, but still, you're going to have some interest. Or Deborah can just write a check for $600,000. If she does, she loses $600,000 worth of cash. She can't use that for investments. She can't use that for going on trips. She can't use that for helping her grandkids. She can't use it for doing fun things with her kids. She can't use it to replace the roof. She can't use it to add on and do the sunroom. Nothing. The money's all in the house. It's all tied up. It's all equity, worthless equity. Or Deborah can come over and you can send Deborah over to Bruce and you can say, hey, Bruce says, give me $306,000 and we'll come in with the rest of it and you're done making mortgage payments for the rest of your life. They're optional. You never have to make another payment unless you want to for the rest of your life. Now, that is pretty darn cool. And that is something that a lot of people don't realize and don't understand the full value of a reverse. Now, will the balance go up if you don't make payments? Of course it will, but your cash will go up if you don't make payments. Either your cash in your left pocket or the reverse mortgage or the equity in your right pocket, those are interchangeable. And if you want more equity, you have to put more cash in. If you want less equity and you want more cash, then you just don't put the cash in. So it's really that simple. It's not that complicated. It's an optional payment mortgage that is run by FHA guidelines. It's an FHA loan and it's run by FHA guidelines. I mean, people say these things are risky and they're scary and they're scams. Well, it's a really well-regulated Federal Housing Administration scam. I mean, many people that are older like me, their first loan was an FHA loan or a USDA loan. They're protected by the FHA loan, and that was our first loan back in the 70s or the 80s or the 60s, whatever. Well, this is an FHA loan also. Federal Housing Administration regulates every bit of what we do. And it's crazy that people think, well, this is a scam. It's a government regulated scam. And they say, oh yeah, the government does a lot of scams. Well, maybe that's true. But the fact is from a lending specific, this is the most regulated loan on the planet because it's a protected class. Very important. So let's look at a couple of options of clients that you might be dealing with. James and Mary, both 65. They want to move to a new community, but the home prices are double. So they sell their, like in central Wisconsin, as compared to moving down to North Shore. Okay, so James and Mary could continue to live in the $197,000 house, or they can move to the $400,000 home for the same amount down. And they make a lateral move, take nothing out of bucket 2, and they're all set. Now here's Cindy, who wants to downsize a little bit. So she could sell her $400,000 house and buy a $375,000 house, or instead she could simply only put down a smaller amount for $172,000, move closer to the grandkids, and put the other $227,000 in an annuity that spins off cash for the rest of her life. By the way, Brian asked the question, what about people that are moving that don't want to give up their old home before they do their new home? Well, this is perfect for that. That's what I did. I didn't want to sell our old home in Wisconsin until we had some time to move. So last year, we bought the house in Minneapolis and in a dining, actually, in the suburbs. And then next month, we're selling our house in Wisconsin that we lived in for 30 years. And it takes a long time to move out of a house. It's unbelievable how much crap that you accumulate over a period of 30 years. It's nuts. I mean, it's like, why do we save this? This is crazy. Because we made fun of my mom and dad when we cleaned out their house. Well, we're just as bad. So, but we wanted to have the time to clean out our house and gradually get used to moving the stuff up there and then get rid of the other house and get that listed. So we were able to do both at the same time because of the reverse mortgage, because we didn't need 100% cash down. In fact, many people just do 20% down on the new house. And then we turn around and do the reverse mortgage later when we sell the house, which is kind of what I'm doing because my house is selling because I wasn't 62 yet. But you've got the option to do that both ways. So here's your prospects. People that want to be closer to family. Never forget that story I told you about going to 3 realtors and not one of them asked me if I was going to move. Every single millennial, if you haven't already asked them, every single millennial that you have in your database, call them up and say, hey, have your parents ever thought about moving close to you? What's going on with your mom and dad? Do they have a house to sell? I'm just an expert in this kind of thing. And I work with an expert on retirement mortgages. Don't even need to bring up reverse mortgages. They're retirement mortgages. They're special mortgages, just like first-time home buyer mortgages or VA loans for veterans, renovation loans for fixer-uppers, whatever. Many people want to reduce home expenses. They don't want a payment anymore. And they shouldn't have a payment. I'm a big believer in 0 payments. People say, oh, you're really big on debt. No, I'm not big on debt. I'm big on no payments in retirement. And if I take on debt that I don't have to pay back until a year after I'm dead, I'm going to do a lot of that, every bit of it that I can. Some people have a change in health status and they can't mix stairs anymore. They got to be in one. Some people, how many of you, if you can type into the chat box, how many of you deal with a divorce attorney? Have a divorce attorney as kind of a referral partner? Anybody? All right, Brian's got one. That's pretty smart because guess what? Silver divorce has tripled, doubled, tripled, and quadrupled people over the age of 60 than any other demographic. All other demographics have stayed the same percentage-wise. And people past 60, it has skyrocketed. And many of those people need to sell a house and buy 2 houses. Now, I'm not saying you should be an ambulance chaser and take advantage of somebody else's misfortune, but you got to be there to help people because a lot of those people try to buy a house with a regular mortgage. Don't. They should not buy a house with a regular mortgage when they're in their 60s. Get a house with a reverse mortgage so they have no payment. If you know anybody that's having a divorce that are over the age of 62, just say, please let me help you. Because sometimes they move into a crappy house and then they got to fix it up and they don't have the cash to fix it up. Get a decent house, buy a $400,000 house for 200. Let's say that the marital house is 400 grand and they sell it and they split it up and they each get 200 grand. Both of them can buy a $400,000 house if they wish with no payments. And so a lot of people don't realize that. They try to go out and buy a house for $200,000 cash or some condo or whatever, and it doesn't work out for them. So that marital status is a big thing. Then of course, empty nesting and the kids moving out. A lot of people think everybody downsizes. Only 51% get a smaller house. 30% get the same size home, and 19% get the same size, and 30%, a full third of us, get a bigger home or a more expensive home, more specifically. So we're not necessarily getting a bigger home, but a more expensive home because we're moving by our kids. And you can see that 27% have not yet moved in retirement, but they plan on moving. So some real quick summaries, and please interrupt me with any questions. You got to be over 62, FHA qualified home. It's got to be your primary residence, living it more than 6 months a year. It will never affect Social Security and Medicare benefits unless your client's on Medicaid. If they're on Medicaid, they should still use a reverse mortgage, but they should do it differently. Keep the title of their home. There's basic credit and income qualifications. It's much easier to qualify. We don't use DTI. We do not use credit scores. We go according to residual income. and we take a look at whether or not they paid their taxes, because that is the biggest single problem with a reverse mortgage is the taxes. If people don't pay their real estate taxes, we have to foreclose, and that is not a good idea. It's a really bad idea, as a matter of fact. So we don't like to do reverse mortgages for people that are not going to pay their taxes, because then we end up foreclosing and we look bad. So we do basic credit and income qualifications, but it's much easier, obviously, to qualify for a reverse mortgage as compared to a forward mortgage, because the payment is always zero. There's never a monthly payment, but you always have the option to make the payment. And you, of course, you own the house. So you got to take care of maintenance. You got to take care of taxes and insurance, just like you would if your house was paid off. So people say, well, my uncle had a reverse mortgage. He got foreclosed on. Well, that's because your uncle didn't pay his taxes. It has nothing to do with the reverse mortgage. He didn't pay his real estate taxes. What if he didn't have any mortgage at all? He would have got foreclosed on. So it wasn't the fault of the mortgage. You have to pay your taxes. The only thing sure is death and taxes. Well, that's kind of the case. So no repayment required. However, this is something, and I could spend an hour on the taxation scenarios, but I'm just going to spend about 2 minutes. And if you want a copy of my white paper on taxation, on acquisition indebtedness, I'd be happy to send it to you. Just email Bruce and Bruce will take care of getting it to you. Bottom line is this. If I have a house paid off, if I'm 62 and I got a house paid off and I borrow money and I pull equity out of the house, I can't deduct any of the interest on that. But if I sell my family home like I just did, and I get a big reverse mortgage on the new house, I have just redone my acquisition indebtedness. That's the only interest that's deductible after the 2017 Tax Cut and Jobs Act. The only thing that's deductible. So there is a bunch of wealthy people that should sell their old house that's paid off and buy a nicer new house where they want to retire, and they will dramatically change their tax structure. In fact, we had one guy that's saving $200,000 on withdrawals from his IRA. So if you know somebody that's got a paid off house that really like to move to a nicer area or move closer to your kids, go list their house and tell them about the acquisition indebtedness. It is a really, really big deal. So that's and like, yes, go ahead, Brian.
Quick question on that. So I appreciate all the slides in that. Do you have an example of that we can take out and put into, say, a listing packet or something to explain to someone what they just run a scenario with, any numbers that we would plug in there and show them what that really means to them?
We do, yes. We'll send that out, send the details out. They have to be, it's a little bit complex because they have to be above $26,000 in standard deductions. So you've got a stack deductions. It's called the Cinderella stacking deductions. So I wait until my interest grows and grows and grows, maybe over the period of 2 years, 3 years, 4 years. And then I make one big payment of $50,000 from my IRA.
Right.
When I pull money out of my IRA, it's a 1099. When I put money into my reverse mortgage, it's a 1098, and it cancels out to zero taxes. And I can do that every 3 or 4 years. And then people say, well, yeah, but then you just lost your money. No, I can pull money back out because I've set up a line of credit. I can pull money back out of my reverse mortgage tax-free. So we'll send you that information that you can put right into the listing package. In fact, it's a chapter in my next book specifically about that. It's one of the most powerful tools for people who have money in IRAs. And they need to sell their old house and buy a new house. And I know realtors don't like, having to do 2 listings and sell that house and buy a new one. But hey, that's just the way it is. You got to do a listing and a sale in order to get this done. So it works out extremely well. Okay, so we're coming close to the end of our time, and I want to make sure I got some time for questions. But I want to leave you with this. This is all about educational stuff on reverse mortgages. But I want to toot the horn a little bit here for Fairway. Before I do that, realize that a reverse mortgage can be set up as a lump sum, which all of the reversible purchases are. Or you can set it up as a line of credit where people pull money out of one house to help their kids. We've got somebody right now that's refinancing the mom is in her 70s, and she's pulling money out of her house to gift to her kids so they can afford to buy a house in the area that they need to be in. So pay attention to the millennial, the mom and dad, kids relationship, because that line of credit is powerful. Will that kid get a smaller inheritance? Yes, but they can afford to buy a house now. I'd rather inherit my house than my mom and dad's house. Because when I'm 90 and the kids are 60, does that really make sense? How many kids move into their parents' houses? Like very few. I mean, it's crazy. And yet everybody wants to give their house to their kids. You don't want to give your house to your kids. You want to give money to your kids. So you don't have to keep it all in equity. You can also take money out. This is where I was talking about originally. When you've got a kid, or when you've got a house like my son who lives by Larry, Larry can pull money out of his house. And now it's a fantastic investment. We can pay him about $2,200 a month for the rest of his life because he bought a $40,000 house and it went up to $450,000. We can give Larry a check for it's about $2,200 from now until he dies. No matter what, he just gets a check every single month, regardless of what happens to the value of houses. So one of the things that I want to remind you of, this will go to 1 to 4 properties, manufactured homes built after 76, condos, they have to be FHA approved, any PUDs, any 55 plus communities or any gated communities, townhouses, and properties held in a trust. And there's no lender credits, there's no realtor credits, those are not allowed. Sellers can pay for the title insurance and home warranty, but they cannot pay for any closing costs or anything else other than that. And if there's a home inspection, we have to be involved in the process. If you're dealing with builders, we definitely, it's a big help with new builds, which are kind of difficult right now in timing. And of course, we go through the financial assessment. And remember, the amount of money is determined by the age of the youngest homeowner. So if you've got a 62-year-old and a 55-year-old, they get a little bit less money, but Bruce will work through those scenarios with you. So several different scenarios, but the last thing that I want to leave you with right here is, certainly get in contact with Bruce because he can help you right there in the local area. This is the home office in Marshfield, where you can also get a hold of us, and we'll get you back to Bruce as far as just some of the info. Now, Fairway, here's where I'm going to promote Fairway for a minute. We are a national company. We are the largest reverse for purchase lender company in the nation, headquartered out of Madison. We have 600 offices scattered all over the country. 600 offices scattered all over the country, but they're local offices, so you get the advantage of having Bruce right there to work with your client through the process. All your job is to say, hey, Bruce knows a lot about lending. He knows about first-time home buyer stuff. He knows about last-time home buyer stuff. He knows about veterans, whatever. You need to take a look at all of your options because things are different than when you bought a house 30 years ago. That's just the way it is. And so that's the handoff that you give to Bruce from there. Now, a lot of people worry about reverse mortgages being accepted in this hot market. We do reverse mortgage closings guaranteed in 17 days, calendar days, 17 calendar days from the time the offer is accepted. And so the lightning speed stuff, everybody's hair has got to be on fire to get it done in 17 days. A lot of people say, 30 days is fine. But just so you know, the customer service and the speed at Fairway is absolutely imperative. So I'll take a deep breath. We got about 7 minutes left. Any questions that any of you have that I did not take care of earlier?
Yeah, I have another one. Thanks so much, Harlan. By the way, I got your book while you were talking because I need to get deeper on this off of Amazon.
You could have just asked me.
That's too bad. Wait. Well, you got an extra one then because Bruce will give you one for free.
Okay.
Sorry about that.
That's okay. I got people to share with. So one question that I have, and this is a little bit vague without understanding this at a deeper level. Right now in the market, when we are working with buyers and they're looking to buy a place, terms like FHA loans, and I understand it's a much larger umbrella here, but tends to be frowned upon by sellers to a large extent because it makes for a more complicated sales process or adds in a little more risk when they don't have to with multiple offers coming in. So is there any stigma or concerns that we have with that in this current marketplace with reverse mortgages?
That is an absolutely awesome question, an important one. We just had a multiple offer situation in Atlanta last month, 42 offers on the same property. Our client won the deal with an FHA reverse because most of our clients can afford to pay cash. They don't want to pay cash because it doesn't make sense, but we can actually give a cash offer with the backup of what we're doing, that we're still going to do an FHA appraisal and all that sort of thing. but it's not going to be more complicated. And we're going to waive some things that if that happens, you don't have to worry about. And so without question, it depends on the client, but if I talk to the listing agent, Bruce talks to the listing agent, they're going to find that that's one of the best, because right now cash offers are falling apart. There's all kinds of people that are putting out cash offers that don't happen because they don't have them verified. We verify cash offers, or we verify reverse mortgages, because if they're going to bring $200,000 to close, we know where that 200 grand is. We've already verified it. And we know where our $200,000 is. So our offer is actually stronger than a cash offer, because it is many times, some people ask for proof of funds, but many times it's not. My son just sold his house in Minneapolis when he moved out to Shorewood. And when he did that, he got a cash offer. Turned out they came to closing with they didn't really have a cash offer. They came to closing with a loan.
Yeah.
So would they have had cash? Maybe, if the loan would have fallen through. But most of our people, we can say, if for any reason this FHA deal falls through, we'll give you cash, and then we'll do a refinance with the reverse. And sometimes we do that in a hot market. But if we get a chance to talk to the listing agent, 9 times out of 10, they're going to accept our offer because it's better and stronger, even if the appraisal comes out low, as some appraisals are doing right now.
That's good. Okay, great.
Great question. That's an important one, because, you know, and it's testimony to the fact of what happened in Atlanta when we won that deal, because even though there's 42 other offers.
Well, I had one last question that's even more important. Do you have to become a Vikings fan now?
Oh, there is no way. In fact, I took all of my Packer gear, and anytime I go shopping, I go to the grocery store, whatever, I have a Green Bay Packers hat, Green Bay Packers sweater, a jersey. I mean, I irritate the heck out of them. And I know that the waitresses probably spit in my food once in a while, because, you know, they're so irritated with me, and I probably get some bad meat in the back when I go to the grocery store. But no, there's not a chance. That's never going to happen. And yes, that's a very important question.
I have a quick question.
Please,
when you're presenting these mortgage options and the reverse mortgage option to your clients, what is the biggest objection that they have, and how do you handle that?
The single biggest objection is, I wanted to give my house to my kids. The single biggest objection. I was planning on giving my house to my kids. Now I'm not going to be able to give it to my kids. That's not true. Your kids are still going to inherit your house. It's just going to have a mortgage on it. So I asked somebody just the other day, and it's this simple. So you want to give your house to your kids. How much do you think your house will be worth when you die? Oh, about 600,000. How many kids do you have? 3. So what you really want to do is you want to give your kids $200,000 a piece, because all 3 kids are not going to move into your house. Is that correct? And I said, well, I've never thought about it that way, but yeah. So why don't you just give that money to your kids while you're alive instead of making a payment? What's the purpose of taking all of this cash and putting it into equity and hope? What if you die in 2009 after the crash? Your kids don't get as much. If you give them life insurance or you give them cash today, they're in a better position. And you're not going to lose the house. The house still goes to the kids. It's just that there will be a mortgage. So if your house is worth $500,000 when you die, and you use $200,000, you just got to pay us back the $200,000 with the interest, and the other $300,000 goes to the kids. So they think that they lost the house, and that has to be immediately dispelled. You did not lose the house. You simply have a mortgage on it, just like you have a forward mortgage on a house. If you owe $500,000 and you got a forward mortgage on the house of $200,000, you still have to pay that $200,000 off when you die. The kids would have to pay that off. It's easier with a reverse because they don't have to make a payment for a year while it's for sale. If you ever have a reverse mortgage on a house and you have any issues, get a hold of Bruce. He'll get a hold of us. We'll take care of the servicing on it. But that is the single biggest objection, Catherine, is they just don't understand it. And they think that somehow it's a ripoff, and somehow they're going to lose something. They're going to lose equity. They're going to spend equity, but they're going to gain cash. And cash is more valuable in retirement than equity, because you can actually use it.
Awesome. Thank you.
Thank you, Catherine. That's a great question, because that is ingrained into our minds. We are trained as baby boomers to pay off your house. I went to mortgage burning parties with my dad when I was 8 years old in the 60s. You pay off your house and you never touch it. That's just,
Right.
it's almost like something out of the Bible, you just got to
Mhm.
do it. And
Yeah.
it's not, it's really a poor way of looking at it. And it's not great for the kids. I'd rather spend money on the kids and the grandkids while I'm alive than leave them a bunch when I pass away. It just simply doesn't make as much sense. And plus it's a nicer house. I can usually afford a nicer house. I wouldn't have bought as nice a house up in Edina if I wouldn't have had a reverse mortgage, because I would have had to put too much cash into it. Okay. Thank you guys very much. I appreciate you taking the time this morning. It was a thrill, and make sure that you reach out to Bruce and just play with some things before you ever talk to the client. Just play with some things and say, hey, I got this client coming in. They got $200,000. They'd like to buy this house for $325,000. Can you tell me how that works? Before you ever talk to the client, talk to Bruce and say, run through this with me. Show me what the deal is. And then after that, then you and Bruce can kind of do a team together. And I guarantee you that your sales will go up if you start asking your millennials, hey, what's going on with mom and dad? Because that is a huge issue. Don't lose the commission on helping somebody's parents, because there's a bunch of parents that love their grandkids that want to move closer. And I'm the perfect example of that without question. I mean, I love my kids, but my goodness, I'll walk right by my son to pick up my granddaughter and not even look at him. Okay, have an awesome rest of the day. Reach out, yell anytime. Really appreciate you guys, and don't hesitate to give us a holler.
Thanks,
Thank
Harlan.
you.
Much.
Thank
Thank
you
you.
for that.
Thanks,
Thanks so much.
everybody.
See you later.
All right.